What's going on, guys? It's Jimmy here. So the Fed made a big announcement here that is going to affect, well, pretty much all Americans here and businesses. And this gives a sign of what is going to come here for the rest of the year as well. This is going to affect your interest rates, your credit cards, your mortgages, your car loans, your personal loans, and this is also going to affect the government debt, billions or even trillions of dollars going forward, and President Donald Trump's as well. I'm going to give you all the details of it in this video, and I'm going to let you hear directly from the Fed, Jerome Powell, in this video, because this is very big here, because this is going to affect your money and your pocketbook. So let's jump right in. We are live right now here on the YouTube It's Jimmy Show. Let me know if you can see and hear me. Type yes in the chat. Let me know where you're tuning in from. You can let me know your city, state, or even your country, as we have people tuning in here from all around the globe. Don't forget to hit that like button for me here, and if you haven't yet, subscribe down below so you don't miss out on future videos. I'll keep you up to date here on everything going on here in our country and around the world that you need to know about here. So remember that the Fed and the head of the Fed, Jerome Powell, control interest rates in the United States. But remember, it's not just up to Jerome Powell, contrary to what a lot of people believe. It's actually voted on by all the Fed presidents and kind of the, the round table of the Fed, kind of the fellowship of the ring. There's actually all the Fed presidents kind of get together and vote on what they're going to do with the economy and interest rates. And then the Fed president, Jerome Powell, comes and kind of gives these big speeches to the American people on what they're going to do. And he's the head of the Fed, Jerome Powell. Now, he kind of gets the slack or the praise for this because he's the spokesman, but it's actually decided by the Fed presidents, for kind of the fellowship of the ring. So take a listen to what Jerome Powell had to say here in this speech, and you guys can let me know your thoughts here in the comment section.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I'll have more to say about monetary policy after briefly reviewing economic developments. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were driven by businesses bringing in imports ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP as we call them, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment over recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.4% this year and 1.6% next year, somewhat slower than projected in March. In the labor market, conditions have remained solid. Payroll job gains averaged 135,000 per month over the past 3 months. The unemployment rate, at 4.2%, remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.5% at the end of this year and next, a bit higher than projected in March. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.3% over the 12 months ending in May, and that, excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 3%, somewhat higher than projected in March. The median inflation projection falls to 2.4% in 2026 and 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to trade, immigration, fiscal, and regulatory policies continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem.
Yeah, so they don't raise interest rates here yet. Again, President Donald Trump is not happy at all, and the Fed doesn't raise interest rates, but they lead on that they're going to lower interest rates here later this year. So there's some good and some bad here. Number one is that, well, interest rates are not going down right now, but that they're looking like they're going to lower interest rates here soon, which is some good news for fellow Americans. Because, well, the good and the bad, this affects your credit card interest rates, your mortgage interest rates, car loan interest rates, even the government's interest rates. President Donald Trump wants interest rates lowered right now, but as you can see here, well, people want interest rates lowered right now, but the sooner they lower interest rates, people are also concerned that that could lead to higher inflation. And with the word out on the street that the tariffs are leading to higher prices, which we are seeing some of that happen, well, the Fed is reluctant to lower interest rates. And you guys can let me know your thoughts on this because, well, this is kind of a double-edged sword, and the Fed is worried about lowering interest rates too quickly, even though President Donald Trump is pressuring them to lower interest rates for Americans and even the government. So let me know your thoughts on that in the comment section, and I'll keep you up to date. The future of finance is getting rapidly changing and getting tokenized. From real estate to energy trading to government treasuries to gold bars and global currencies, the market is set to explode past $16 trillion by 2030, which is not that far away. less than 5 years, according to Boston Consulting Group and ADDX Investment Group. Now, an exciting opportunity has arose while this has been happening. Now, as you can see here on Yahoo Finance, digital asset technologies in the United States is U.S. ticker symbol EATBF, and the Canadian ticker symbol is DATT. Over the last 1 year, as of the time of filming, has returned over 111% here at the time of filming here. And you can see this directly on Yahoo Finance. This is ticker symbol EATBF on Yahoo Finance. Their strategic shift from alt food to digital asset infrastructure and blockchain technology is exciting. They've recently restructured the stock, which allows investors to participate at ground floor prices. Now, they have recently acquired 100% of Liquid Link AI Corporation, formerly Milo Media Technologies Incorporated, which is building out a brand new platform that combines intelligent search, seamless discovery, and powerful routing tools. This will give individuals and businesses the tools they need to trade and scale confidently in the Web 3.0 economy. Liquid Link's technology enables fast and efficient payments across both the blockchain networks and traditional financial systems using open source technology and protocols like the Interledger protocols. Powers XRPFY, a search engine that scans the XRP ledger to catalog and rank all digital assets issued on the network. The system works by finding the cheapest routes for converting one currency to another while taking into consideration the reputation of the sources. When money moves across the network, sometimes it needs to change currencies to pass through several steps. Liquid Link provides the fuel through XRP and stablecoins with cryptocurrencies through the blockchain network. So these transactions happen instantly and at a low cost. Liquid Link doesn't deal with end users. Our customers are other network participants who rely on us to keep the system running smoothly. Now, here's the cool part. Liquid Link earns money making tiny transaction fees each time they help route a payment through the system. We earn a small fee for providing the services each time a payment goes through the system. Also, they earn a spread on currency swaps. So again, Liquid Link, we earn a facilitate. When they facilitate conversions between currencies, they earn a small margin or spread on each transaction. Also, indirect revenue. Customers are financial institutions and network participants, not regular consumers. Earnings come from supporting the underlying infrastructure that powers global payments. Also, Liquid Link earns and accumulates XRP tokens as part of its operations. As the network grows and adoption of the Ripple ecosystems increases, the value of XRP will likely appreciate significantly, providing additional upside for Liquid Link through the growth of these tokens. Also, they have added onto their company here as a strategic advisor and investor, Mario Nawfal, who is a globally recognized entrepreneur and investor and has millions of followers, is a force in the modern media and Web 3.0 innovation, and has a most influential audio show, has hosted global icons such as Elon Musk and Mark Cuban, as well as several major influencers. He's a seasoned entrepreneur with multiple successful exits and a respected venture capitalist who has backed breakout companies in AI, gaming, blockchain, and digital media. So the growth for this company is poised to be very interesting for the future. You should definitely look into this stock. As always, do your own due diligence. on the U.S. Stock Exchange is EATBF, and on the Canadian Stock Exchange is DATT. And thanks to Digital Asset Technologies for this paid sponsorship. So make sure you subscribe down below so you don't miss out on future updates. I'll keep you up to date here with everything going on here on a daily basis that you need to know about. Click here to watch my newest video next. Thanks for watching, guys, and I'll see you.